BK.
All right, well, right on cue, Nigel, the market open, first ticks coming up. I think, the pre-open was indicating a open around the 20-day, not exactly, but 22,270 is that number. We start with the open is coming up on your screen, 22,359. So about 70, 80 points above the 20 days where we are opening at, 0.75% lower. So it's a 150 odd point cut. So nothing large, right? This is par for the course, as earlier GIFT Nifty was also indicative of. So give it time. I mean, the first 1-2 hours and see if the market is able to sort of sustain, defend, and then maybe you kind of look for a pop higher once again, a buy and dips kind of thing. Nifty Bank is down about 0.75%. We're down about 400 points. So that's a bit of a cut. 1.5% cut on the mid-cap index, and I think small caps are also opening lower. So red as far as the start is concerned. But let's talk about stocks. Sonia has got those. Sonia.
Well, thanks a lot for that, Prashant. So as you rightly pointed out, it is a weak start, and this was what the street was expecting, right? Given the kind of geopolitical tensions that we're dealing with Israel and Iran. But let's move on to individual stocks now. TCS, the result reaction, we're expecting it to be in the green. It's not as bad. Actually, it's outperforming the market because the margins were at a 3-year high. It was record Q4 deal wins. The management commentary was positive as well. So TCS is down but not out. JP Morgan, in fact, has upgraded TCS to an overweight and raised its target price to 4,500 from 4,000 earlier. Indian Hotels is the next one. We just saw it on the screen. UBS has a buy. They've raised their target price to 715, and they say that earnings upgrades are expected on Indian Hotels. So that stock as well, while the market is down about almost 170 points, Indian Hotels down just about 0.5%. So not too bad over there. Exide is also in focus. The stock is bucking the trend this morning as Morgan Stanley has raised the target price on Exide to 485 from 373 earlier. Zomato is the other stock I'm looking at. UBS has a buy. They've raised their target price on the stock to 250, but the stock is coming in for some correction now in tandem with the market. In the real estate space, Colte Patil is in focus. Its highest ever annual sales value at 2,822 crores, which is a growth of 26% year on year. Just keep that on your radar. Polycab is in focus. This entire space, Motilal Oswal has written a note where they've initiated a buy on Polycab with the target price of 7,500, big upside to the current market price, and they like this entire space. Now, there are a couple of heavyweights that will be in focus this week. Infosys comes out with earnings. Bajaj Auto comes out with numbers on 18th. So these stocks ahead of the numbers are in focus. And then you have something like Anand Rathi Wealth as well. They've exceeded FY24 guidance in terms of both revenues and profits. So Anand Rathi Wealth in focus. But remember, overall the market sentiment is weak. The Nifty is down almost 200 points. The Nifty Bank is really facing the heat this morning, down about 520 points. So it's not looking like a good start at all. Back to you guys.
All right, thanks a lot for that, Sonia. Well, a couple of stocks, though, are taking it hard, on the chin as we speak. Torrent Power is down. It's down big time, actually. It's down close to around 5% as we speak. So some selling pressure out there. NBCC is down close to around 6.5%. Rain Industry is down close to around 4.5%. And NCC as well, down close to around 4%. What's doing well? Well, a couple of these metal stocks are doing well. Vedanta actually has slipped into the red. So there is some selling on some of these stocks because they've actually already rallied big time. Even Hindustan Copper is down close to around 6.5%. But what's doing well? Well, Nalco is up close to around 2%. So that stock continues to hold in the green because it is an aluminium play. Hindalco as well is holding a little bit in the green, I think so, up close to around 1.5%. So both those two are pockets of strength, actually. ONGC is up close to around 1.5%. Maybe, in fact, some part of the capacity will go out of the way. So that explains why that stock as well. Well, what's under pressure? OMCs are under pressure. Crude oil prices are moving up. We have elections around the corner. So in all probability, they will not be able to push through this cost increase. And that's why you have BPCL, HVCL and IOC, all of them seeing some selling. Coal India is well down close to around 2.5%. So fair bit of red, Prashant, on the screen. We're very, very close to that, the 20 DMA, which comes in at around 22,270 for the time being, almost at around 22,300.
Absolutely. I mean, getting to the 1% cut mark for the Nifty, 22,322 or so is where we're at. Aster DM has got the largest volumes. That dividend announcement, of course, came, which was well expected. But I think the dividend number has come at the higher end of what the street was expecting. We'll have the management join us a little later. Look at the volumes, 3.6 million shares. It's by far the biggest volume-led gainer. Hindalco is up 2%, and I think Nigel mentioned some of the other metal stocks. TCS, it's a 1/3% higher start, so neither here nor there, but positive. Idea is up about 1.5%, 13.15. So, the anticipation, of course, is for the FPO. And that is starting higher this morning. ONGC is up about 1%. There is Senco, which is up 4%. Mangalam was telling us about Senco earlier. It's got large volumes on it for this point in the day. There's something called Pratham. Pratham is up some 18%. But I'm mentioning that because it's sort of coming up with large volumes. You don't usually see that name. At least I've not over the last many weeks now, but it's there. And Exide is popping up. Exide is up another 3% this morning. Stocks almost at about 410 rupees or so to begin the day. On the downside, IRDA, SJVN, NBCC. So these are all PSU names which are taking a bit of a knock. And these three have got the largest volumes as well. And there is Olectra, which is down about 6.5%. Of course, this is with regards to, investigative agencies over the weekend, I think, looking at one of the promoters for Olectra Green Tech. So there's a bit of a hit which is coming there. There's what else? GSFC down 6%. Rights, which is down 6%. A lot of PSUs. IIFL is down about 6% as well. IIFL was one of the 25% movers last week. So that's seeing a bit of a cut as well. Shipping Corporation is down 6%. So 2,000 stocks are down and 150 stocks are higher. So it's completely one-sided for now, but we'll see. 200 down now on the Nifty, approaching the 1% cut mark on the index. Andrew Holland is with us, Chief Executive Officer, Avendus Alternate Strategies. Andrew, good to have you with us here. Thank you very much. Even without all of this geopolitical bit of an upheaval, market here, as we left off last week, was looking a little weakish, right? Even the US market, and we were making this point on Friday morning, in the last 10 days, we've had some negative technical indicators, 2 bearish outside days in the US in the last 10 days. So even without Iran, Israel, etc., markets had kind of primed up a little bit. What's your sense near term, Andrew?
So near term, Prashant, it's, if you think about it from that kind of, the problems that we saw in the middle of March, the market confidence came back. And we reached new highs. So, I think it's a little bit of taking money off the table. Obviously, the kind of geopolitical problems have increased in that time as well. And for the US, it's even though you've said what you've said, it's given the kind of data that's coming there for inflation or jobs has been a lot stronger than expected, and bond yields have risen. It's not really such a big fall, for those markets, and you're seeing the same in Europe as well. It's not, if anything, I would just say it's just taking some money off the table, given the events. But given that it's just 1% or 1.5% falls, it's not significant. And I think on Friday, apart from the geopolitical tensions, you had some of the bank earnings in the US which disappointed. So obviously that had an impact on the sentiment as well. But I do see futures are kind of slightly higher in the morning. So maybe the geopolitical tensions are just hopefully will fade from here after the events over the weekend. So I'm still kind of not getting overly kind of negative on the market. I think these kind of corrections are okay. I don't think there's anything to worry about from what I can see at the moment.
All right, so there's nothing to worry about. These kind of corrections are perhaps par for the course, right, Andrew? So what do you do at a time like this? Do you just sit back, take a step back and just watch these events play out? Or do you use this dip? I mean, whatever it is, even if it's 2%, 3%, 5%, do you use it to get into the markets now? What's the best way to approach it?
Yeah, everyone's been kind of wondering, when should we get in? What's the timing? Should we wait? And then these opportunities come along, and I think it's a good time to be kind of dipping back into the markets. We had a pretty good showing on Friday. If you think about the expectation that market's going to fall, so maybe it's the reverse of that. Market falls this morning and then recovers during the day. And I would think if you like the themes that you want to play for the next 2 to 3 years, these are the opportunities you get, and just continue to deploy money at this point.
Hi, Andrew. Good morning and good to see you in. Nigel on this side. I recall when we spoke a couple of months ago, you said you like the metals pack. You're a little bit optimistic out there because you said China could probably come out with some stimulus. They've done something on ground, but maybe not enough, though the metal stocks have done very, very well in the last 3 months or so. What's the view on metals at current reckoning?
Yeah, well, obviously, metals have performed very well, and I think that will continue, particularly now that there's obviously sanctions going against Russia going forward, and we'll see what the LME says, the London Metal Exchange. But that's obviously good for the likes of copper and aluminium going forward. I still think maybe that the steel, whilst you'll see price increases, I still think there's overcapacity in China, so that could be the way to play it would be more kind of aluminium, copper versus steel at this point.
All right. So that's on the metal space and on steel. What's your view on how to approach IT now? We've just got TCS's earnings, but it's not as bad as what one would have perhaps feared earlier. The commentary was good, margins are good, deal wins are strong. But of course, there's so much changing in this sector, right, with generative AI, etc., taking center stage now. As an investor, how are you approaching it?
So I thought the results were good, actually, I think if you think about all the headwinds they have, I thought it was a very good set of results. And of course, they're going to be cautious because the US is still in that recovery phase, and it will take some time. But I think there's a bottoming out here for the IT sector, and I think we'll see what the results are like. But I think if TCS is a kind of the bellwether for what we can expect from other companies, then I think you'll see a lot more interest towards this sector. So dipping our toes, and of course, if interest rates do fall in the US at some point, I think that will be the extra tailwind for the sector. So you could wait for interest rates, or you could say that the bottom's already here. I think the bottom's already here for the likes of looking at TCS's results. It looks as though the bottom's being made.
Just a quick look. I mean, the market, it's early, to actually look at market breadth in any significant way, but it's, of course, gives you a sense. It's all down. But volumes on the downside, if you just sort of rank stocks which are down by volumes, it's a pretty short list. So the, IRDA, Electra, NBCC, NLC India, and then you go down the list and volumes are lacking. Although the gainers list is much shorter, I would say there, the list of volume-led gainers is much longer. So that gives you a sense that there's still a fair bit of interest in specific names. Look at something like Ashiana Housing. There were reports that Ashiana's been able to sell out a project, I think in the NCR region, in 15 minutes flat. I think it was a luxury project. So Ashiana is coming up with large volumes, 500,000 shares there nearly coming through. These chemical stocks had shown some signs of life last week. Jubilant in Graver is up about 3%, 3.5% right now. So we'll see. And of course, Idea is a fair bit of interest there as well, 2.25%. Just kind of investors trying to figure out whether post the FPO, the equity infusion from promoters, there's money to be made here. Andrew, on Idea, what's your view, if you have any thoughts?
I can't really speak on individual stocks, Prashant, but obviously, if I take that the funding goes through, this is good news for the whole sector. And I think with the government there, I think it will likely go through as well. And thereafter the elections, I think you'll start to see tariff increases as well. So I think I think overall for the sector's probably poised for an upturn from where we are. So this, I think, will give confidence to investors in the players in the telecom market. So I think it's going to be good news. I don't see it as being bad news.
Okay, all right. Andrew, what about, we have had Modi 1.0, Modi 2.0, and now we're preparing for Modi 3.0. What would be on your wish list? What more would you expect from this government?
Well, the manifesto is not really kind of saying of any big bang reform, so it's more of the same from what I've read so far. And the themes, Nigel, are just not going to change, are they? Defense spending, renewable energy, railways, infrastructure. Those are the kind of big, big spending the government's going to do, and that has multiplier effects across many different industries. And of course, those themes that we talked about before in terms of premiumization of the beverage market, leisure in terms of hotels and airlines, that's going to continue, and the electronic manufacturing sector as well. These have long runways of growth, to my mind, over the next 2 to 3 years. So I only see that the government will enhance this and help in terms of whether it's spending on infrastructure or tourism or electronic manufacturing sector in terms of PLI. So I think all of those sectors I think will do very well.
One of the other sectors that has done very well this year is autos, right? So Bajaj Auto, for example, is up over 30%. Similar is the case with many of these other names, and electrification has been a great theme. There's been a recovery once again in the rural markets as well. If this dip extends itself in the market, would you recommend buying into any of the auto stocks?
I think I'd probably look more at the auto components. I think I'm going to wait to see what Tesla comes out with, but I think that could have a good fill-up for the auto component sector going forward. I think that's the way I'd want to play autos at the moment. I think a lot of it's in the price for the main players. So I think the auto components is where I'd be looking to put more exposure at this point of time.
All right, Andrew, we'll leave it at that. Thanks a lot for joining in. I appreciate your thoughts here on CNBC-TV18, and have a great week. By the way, the bulls are not having a very good start to the week. The Nifty is now down 200 points. The Sensex is down 670 points. We were expecting this to happen in the sense, geopolitical tensions have sort of led to the market seeing a bit of a sell-off. But the important part is, does this extend itself through the course of the day, and will the dips get bought? Well, time will tell. But for now, we are moving on. Aster DM Healthcare is the stock that is really buzzing right now. Despite a fall in the market, the stock is up 10%. That's on the back of a special dividend announcement of 118 rupees per share. Also, there's no interim dividend will be declared for FY24. So to discuss more on this development, we have Nitish Shetty, who is the CEO of Aster DM Healthcare. Nitish, thanks a lot for joining in. Can you tell us a little bit about this special dividend? How much will be retained by the company in terms of, the transaction proceeds? How much will be used as dividend distribution? If you can just take us through the way forward.
Yeah, good morning. You're aware of the special dividend announced by our board on 12th of April. 80% of the sale proceeds will be dividend out as a special dividend at 118 rupees per share, and around 1,500 crore will be retained within India. The future of the 1,500 crore, how we want to use it, will be decided in the near future by the board. Because as I speak now, we have clear-cut plans for our expansion in terms of deploying 1,700 beds in 3 years. This we are going to do with our own internal accrual, because we have enough cash flow happening, because most of our hospitals are matured now. For inorganic growth, we might consider this retained amount of 1,500 crores, or we might leverage on a share price, which is doing well, as you are aware now.
So can you tell us what is the promoter stake right now, and any plans that the promoter has to divest further stake? Any plans to reduce the promoter pledges?
At this moment of time, our promoter, Dr. Azad Lupin, have made it very clear that they have no plans to dilute their stake. They believe in India story. It has just started for Aster DM India now. We have plans to be a top 3 in the country. At this point of time, our promoters have no plans to dilute. They have been very clear about that.
Okay, all right. Hi, Mr. Shetty. Good morning and good to see you in. But Sonia asked you about the other part of the question, right? You're saying they don't want to sell out, but most of their holding of that 41.88% is pledged, 98% odd. Any plans to, release this pledge on the promoter holding?
Yeah, probably promoters will be in a better position to answer that question. But at this moment of time, they have plans to release the pledge at the earliest.
Okay. Do you want to give us a timeline by when they can do that?
Would not be in a position to say an exact timeline, but it will happen very soon.
Okay, all right. Now the focus is going to be on the domestic business. Earlier, bulk of the valuation was coming in from the overseas business or the Middle East business. So give us a few numbers. What is the current capacity? and say in the next 2 years, 3 years or so, where do you see the bed capacity headed? I'm looking at it in revenue terms. On a quarterly basis, you're doing close to 950 crores of revenues. Where do you see that number headed? Give us some outlook, because now you're going to be focusing on growing the India business.
Yeah, we are very, like I mentioned earlier, we have clear-cut plans of we in the next 3 years of rolling of 1,700 beds. Presently, our capacity is at 4,800 now. We are planning to add 1,700 to take it to 6,600 beds in next 3 years' time. That is through organic route. Most of the bed addition will be happening through brownfield expansion. That means that we are expanding the existing hospital capacity, because most of the hospitals are at 80% capacity now, occupancy. So that is the brownfield plan, and the greenfield is going to be 40% of our plan, which is primarily in Kerala cluster of ours, where we are adding 2 more new hospitals, one in North Kerala and one in South Kerala. In terms of other, we are also integrated healthcare provider now. Apart from being a hospital player, we have labs and pharmacies. We have close to 250 pharmacies and 250 lab. We are also kind of planning for expansion of especially the lab vertical business in the near future.
Mr. Shetty, just to confirm, you currently have a plan to move from 4,800 beds to 6,500 beds, and post 6,500, right?
6,600 beds.
Correct. And then besides that, you also have a greenfield plan. With that plan, what does it take the total capacity to, and by when?
No, 6,600 includes brownfield.
Includes everything. Got it.
Right.
And apart from that, like I mentioned, we also are open for inorganic expansion. We are exploring all the opportunities. We want to go beyond our geography. We are primarily present in 5 states now.
Got it.
And we would like to go beyond our geography also. We are exploring those opportunities also.
Right. So, I mean, you're strongest, Nitish, hi, good morning, Prashant here. You're strongest in Kerala, right? You said that you will obviously expand in Kerala as well. But you're looking at other metros now. Bangalore, for example.
Yeah, obviously, we have plans in metros, because 70% of our business are coming from tier 2, tier 3 cities at this moment of time. We are majorly present in Kerala with close to 2,600 beds in Kerala alone. And we are adding more than 1,000 beds in Kerala in the next 3 years. So we have really a very dominant position in Kerala, but we are also expanding in Bangalore, and we are also looking at opportunities in Maharashtra, cities like Pune, and also up north in UP, in Lucknow.
Would this you sort of build this out on your own, Nitish, or is acquisition, etc., possible? Because there are, for example, I mean, Healthcare Global is a company where there is a large shareholding by private equity, which is it's on public record. They're looking to sell. I'm just not that one opportunity, but just that came to my mind. But all this build out is going to be organic, sort of on your own, or you're open to inorganic opportunities as well?
Yeah, we have clear laid out plan for organic growth, like I said, 1,700 beds. But at the same time, we are also exploring opportunities of inorganic opportunities, any merger and acquisitions. So we are also open. Smartness is being agnostic in terms of the opportunities. We are not fixated with particular idea. We are open to all ideas will help us in growing quickly and faster. That's a need of the hour to be the top 3 in the country in the next 3 to 5 years.
What is that? How many beds will take you to that? I mean, you would have looked at the ranking in terms of the number of beds, right? Capacity.
Yeah, we are there now. We are there with the next 3 years with organic growth alone, 6,600 beds. We are already there, but we are contemplating taking beyond 10,000 beds.
By when?
By next 5 years.
Okay, 10,000 beds in the next 5 years. Got it. Just a couple of more questions. On Olympus Capital, they had divested about close to 10% stake in the business. How much stake do they have left at the moment, and any further stake sale plans by Olympus?
Yeah, they have around 10% now. They were at 19%. Now they have 10%. But I will not be able to comment on the Olympus plan. But as far as we are concerned, they have been a very supportive investor with us. They've been with us for more than a decade now. they have their plans, but about their plan going forward, I'll not be able to comment. But whatever they have sold in the market, their shares has been picked up by good foreign institutional investors and also domestic institutional investors. So that reflects on the fundamental strength of the Aster business.
They will continue to hold 10% at least for now.
Yeah,
is the understanding, right?
I'll not be able to comment on their behalf, but looking at our fundamentals, I'm hopeful that they might continue.
Okay. Any other private equity firms that would be interested in the company? Any talks that are ongoing currently?
There's a lot of interest. Like you've seen, our share price has appreciated substantially in the last 1 year. There is a lot of now, India being a pure play India business now, there's a lot more clarity about our business compared to our peers in India. So there is a lot of interest. We are in a discussion, but it's very early to comment. Probably 3 or 4 months down the line, clarity will emerge.
Okay. Finally, can you tell us about, you were talking about both the organic and the inorganic plans, but going forward in terms of the growth rate, what are we looking at in FY25 and FY26? How much would come via organic and how much via inorganic?
Yeah, in terms of revenue, you can say we have been growing in excess of 25% CAGR. That's the best in the market in the healthcare industry, especially in the hospital sector. We are hoping to grow at least 15% CAGR going forward next 3 to 5 years. And even EBITDA margin has been growing in excess of 35%, around 35% in the last 5 years. And we envisage even that expanding and continuing to grow at the same pace.
So this 15% CAGR, I mean, if you can just break it up for us, how much via organic, how much via inorganic are you looking at?
Yeah, this 15% I mentioned is organic only. But when we do the inorganic growth, we'll be in a better position to exactly project the growth rate. At this moment of time, I'm not considering the inorganic growth, but only the organic.
Appreciate you joining in, Mr. Shetty, and wishing you all the best with those plans to go to 6,600 beds and then maybe 10,000 beds as well, as you told us. Well, we look forward to having a chat with you as you firm up those plans. Well, let's focus on a pharma company then, Lupin. That's been one of the big outperformers actually in the last 1 year or so, and plenty to talk about. To help us out with how's the business shaping up, we're joined by Mr. Ramesh Swaminathan, the Executive Director of Global CFO and Head Corporate Affairs. Hi, sir. Good morning, and always good to have you on the show. Well, you've got a couple of approvals. Orasia, you have got Ingrezza as well as Aptium. Those generics have got approvals. Could you tell us what is the potential sales that you could be getting from these recent approvals?
Thank you for having me on. It's always a pleasure. We don't talk about individual products, but all of those obviously add to the kitty. Mainstream obviously is going to be our respiratory portfolio that we have been trying to grow over time, and all of these products kind of chip in. So essentially, these are products which are important, but at the same time, the most important products are really out there in the market, which is respiratory products. And over time, we'll be looking at a host of others on the injectables front and the like.
Okay, could you give us some more color though, sir? What is the competition in some of these drugs? Is there limited competition? That's the sense that we get. So if you could throw some more color out there.
Yes, obviously, doxycycline, in fact, there is limited competition out there. It is going to be, none of these products are going to be huge grossers, so to speak. There would be intensity of competition coming up over time. But I think the more important point is the fact that the company is pivoting to more complex ones, which is essentially the respiratory portfolio, the injectables piece, and the like. And that is, I think, is what is going to drive the future as well as the performance in the near term.
Ramesh, hi, good morning. Prashant here. Not huge grossers, but possible to put some indicative numbers? I mean, in a ballpark?
You're not going to get a number from me.
Okay, got it. I had to try. Now, you were talking about the respiratory side of the business, right? Now, talk to us about how key drugs like Spiriva generic, that one is sort of shaping up. Again, I mean, some numbers would help, but give us qualitative comments as well. Go on.
Yes, of course, sir. Spiriva continues to do pretty well. So the new conversions are close to about 31-32%. The recent, initiative by BI to actually restrict copay to $35, it doesn't really impact us. So we continue to do pretty well. I think given the fact that there is no competition for it, at least from a generics perspective, it will continue to do very well for the next couple of years at least.
What about Suprep and, if I got this right, the HIV drug, which is Darunivar? I mean, how are those doing?
Those did very well for the time that they lasted out. As you could expect, the generic market is all about, a huge upside on launch and then thereafter a continuous decline. And that's really true with, in fact, the OSD portfolio. Suprep as well as, in fact, Darunavir had their, exclusivity for quite some time. There has been competition since then, and that's come down. And to that extent, that is on expected lines.
Okay. Ramesh, hi. Good morning. This is Sonia here. Always great talking to you, and thank you for taking the time out. Overall, for the US business, what is the kind of quarterly run rate we're looking at? I think last time you had mentioned $200 million per quarter is something you can sustain. Is that for FY25? Can you build on to that?
It should be around the same thing, about 200 or 210, so to speak, on a quarterly basis. It could go up a little, come down a little, but it will be in that vicinity. We have a number of products that we have lined up. There are, of course, the continuance of certain products in the ophthalmic range that we launched a few weeks ago. Going forward, there will be newer products that we would be launching, Mirabegron, potentially Slind, and so on as well. All of this will potentially add to the figures of 200 odd that you're speaking about on a quarterly basis.
Okay, so the US business is picking up. I mean, if you look at the last 5-6 quarters, right, the average sales run rate has picked up. Approvals are coming through as well. Can we also assume that you can build on to your margins, because margins have hit 20%? But is there any scope to, are there any leverages for margins to go to 22-23% in the near future?
Well, for sure. So let's talk about the buoyancy on the top line. As you could see, there has been tremendous buoyancy over the last several quarters. As we promised, in fact, the margins have also been creeping up. Over the last 5 quarters, we have been continuously increasing the margins. This is as a result of, in fact, the buoyancy that you see on the top line in America. And of course, the growth that you see in other parts of the globe also. India continues to do very well. And for sure, Europe, given the kind of respiratory products that we launched out there, and of course, Nemuscla, that's doing very well. The emerging markets, which is essentially Philippines, South Africa, have done very well. Mexico, which was actually undergoing some issues with the local FDA in the last quarter and a half, has also done well. There is some issue insofar as Brazil is concerned. But in a general sense, the companies, all the geographies are doing pretty well. We've also got out of a lot of our issues with the FDA and the like. That helps in terms of the number of products that you'd be bringing to the market. And of course, the focus on cost has paid off tremendously. We identified several initiatives and we worked on it across every line of the P&L, so to speak. Alternate vendor strategies in terms of routes to synthesis, looking at productivity of the workforce at the R&D front, at the plant front and the like. And of course, looking at SG&A expenses. All of this has translated into pretty good numbers for us. And the results are there to see.
All right, Mrs. Swaminathan, I recall when we spoke the last time, you were telling us that the US business will continue to clock this $210 million odd on a quarterly basis, and gradually you will scale towards the $250 million, which will take you to the $1 billion mark on an annual basis. That's in the coming years. But I wanted a more qualitative, input from you on the price erosion. I think the last time you told us it was down to single digits. What is it at currently?
The price, erosion is a lot more benign these days. It's in the single-digit numbers insofar as the OSD portfolio is concerned. I think it's essentially because of 2 reasons. One is essentially a lot of companies have actually shared their portfolio, as we have also done in recent times, and just focusing on products that are pretty profitable. And the second aspect is given the interest rate regime, interest rates in various parts of the globe, and for sure in America also, a lot of companies that had levered and have tried to sell their factories, closed down companies and the like as well. And for that reason, the intensity of competition insofar as OSD is concerned has come down quite a bit, and that's contributed to the kind of benign regime that you see on the price front.
Just to kind of tie in that the price the price erosion bit. We got the US also gets into the election cycle. Do you see, Ramesh? I mean, there's a lot of noise around every quarter, especially now. But do you think that to be a bit of an issue going into the elections over the next couple of quarters, or not really?
I don't think anything is actually going to derail this, essentially, because generic medicines are all about affordability, and as long as generic, it's important for these medicines to be out there. The IRA or recent regulations and all of that actually are focusing on, in fact, the ethical pharma bit, the branded pharma, those with IP and the like. It's not going to derail the process insofar as generic business is concerned.
Okay. I had a couple of more questions. On the remediation measures of the companies Tarapur and Mandideep Unit 1, what's the status currently?
We are in a state of preparedness. It's a question of they coming over and inspecting once again. So it could happen anytime. And as with, in fact, the other factories, there is a lot of focus on QA and the compliance bit. The state of readiness there as well. You just saw the recent results with Dabasa. Very pleasing at that. We expect the same thing to happen to the other two units, which have been under scrutiny for some time.
And one final question on the diagnostics business. A lot of companies that we've spoken to in the past have said that the competitive pressures have eased, pricing pressures have eased as well. Is that something that you're noticing too? And what do you see as the outlook for the diagnostics business?
Yes, you're right about the fact that the intensity of competition, or for that matter, the price wars that we saw are actually coming to an end. We are pretty bullish about the diagnostic future. But having said that, it's never going to be the dominant theme. The most important thing from our perspective would continue to be the pharmaceutical business. But these are very useful adjacencies to have because it kind of adds to the overall patient centricity umbrella that we're trying to build out here.
Okay, all right, Mr. Swaminathan, always good hearing your thoughts. Thanks so much for joining in. Post your Q4 numbers, we'll get some more quantitative aspects as well that we can address. For the time being, thanks so much for joining in. Well, by the way, when we're having those chats with the management, just pull up the Nifty, the intraday chart. We went to the 20-day MA, which is at around 22,270. Our low today was around 22,263. And from there, we've seen a bit of a bounce. So very, very close to that 20-day MA is where we are trading at. Just around 25 points higher from that. In terms of a reference point, it becomes very, very crucial that we defend that mark. 22,200, well, that's the mark where you have the highest open interest on the put side. And that's where the 20-day MA as well comes in at 22,270. For the time being, we'll slip into a short break. When you come back, we'll get to our earnings season, quarter se quarter tak, and we'll be addressing the oil and gas space. Don't go anywhere.
Welcome back to Bazaar Morning Call. Well, for now, the market is not looking good at all. 1% lower on the index. But this is our segment Quarter Se Quarter Tak, where we get your expectations from each sector. Today, Sonal is with us to tell us how Q4 will be for the oil and gas sector. Over to you, Sonal.
Thank you so much for that. It's expected to be largely a good quarter for oil and gas space. But let's start with the basics. The Singapore gross refining margins, the GRM, surged to $7.3 per barrel in Q4 from $5.5 per barrel in the previous quarter. Brent crude prices remain relatively stable at $83 per barrel on a quarter-on-quarter basis. Now let's talk about Reliance. It is expected to report a consolidated EBITDA growth of around 4% on a quarter-on-quarter basis and 10% on a YY basis. The O2C segment is expected to see 11% increase in EBITDA, while retail and Geo will see low single digits on a quarter-on-quarter basis. Upstream companies like ONGC and Oil India are expected to see modest EBITDA growth of around 3 to 5% on a QOQ basis. This is primarily due to lower operational expenses, while volumes and realizations, they are anticipated to remain stable. Despite a mid-March cut in fuel prices, oil marketing companies are expected to experience a rise in marketing margins. The improvement in gross refining margins is expected to see a growth as well, and that is something that will be good for refining segment. Let's talk about the profit estimates. HPCL expected to see a big growth of around 200%, which is expected by Nuvama, and the others will see a mid-digit growth. Now, city gas distribution companies like IGL, MGL and Gujarat Gas are expected to witness volume growth of around 2 to 3% in the quarter. However, fluctuations in EBITDA per SCM are likely due to price adjustments. So, IGL and MGL will see a decline due to price cuts. But Gujarat Gas is expected to do well in terms of EBITDA growth. Now about gas utilities, GAIL will see 6% increase in EBITDA due to decline in Henry Hub prices. Petronet LNG will see EBITDA to be up 4% on a quarter-on-quarter basis because of better Dahej utilization and tariffs. While for GSPL, it is expected to be flat in terms of EBITDA growth. So this is what is expected from the entire sector this quarter.
Thanks a lot for that. Well, Prabal Sen is also joining in, Senior Research Analyst, Oil and Gas at ICICI Securities. Prabal, you heard Sonal out. What would your big takeaway be from this quarter? What are the expectations this time around?
Well, I think broadly Sonal covered it. It's looks like a pretty strong quarter for across the coverage universe. There's refining margins have gone up. Integrated petrochemical spreads have also shown a little bit of an improvement. Spot LNG prices have been a little bit under control. So to that extent, EBITDA margins, particularly for the CGD companies, have also improved. And for GAIL, the growth in transmission and trading margins, as well as some improvement that we expect to happen on the LPG and petrochemical margins front, means that even their numbers are going to be fairly solid. So from a overall perspective, I think the numbers actually obviously look fairly strong. I think Reliance also is going to likely to see a fairly strong recovery in its oil to chemical segment, which is likely to drive the QOQ improvement that we are looking at on both EBITDA and net profits front. So pretty strong quarter overall. Obviously, the macro has changed quite a bit, since then. So, depending on how the macro plays out, I think the reaction to these numbers will be determined. But from a quarter perspective, I think a fairly strong quarter in prospect across the board.
All right. Hi, Prabal. Good morning and good to see you. And, we have this news piece that we're addressing this morning and over the weekend as well with regard to the skirmish between Iran as well as Israel. Now, Iran has a fair bit of contribution both to the oil as well as the gas space. So could you quantify that number? What is their contribution?
Iran, I think, produces about 3 million barrels a day of oil, which is basically 3% of the overall oil supplies globally. And their gas production is actually the third largest in the world at about 700 odd MMSCMD. But interestingly, their exports actually are less than 3% of the global trade at, I think, somewhere around 50 MMSCMD, or about 13 to 14 million tons only out of the 400 million tons of LNG that's traded. So there's a lot of domestic consumption, but obviously in terms of the overall demand supply balance for both oil and gas, Iran is an extremely important component. So any disruption that happens to that supply, and I'm not saying it will, but any disruption, if it happens as a result of escalation of this conflict, will have a material impact on the global oil, and gas demand supply scenario as well as prices.
Okay. All right, Prabal, just to follow up on that question then, the OMCs have done very, very well, and there was that fear that maybe there'll be price cuts that'll come about getting into election. Some of those fears didn't really come through. Now the problem is that the Brent crude prices are spiking up, and since we're getting to election, if you have to get a price increase, it'll only happen post that. That's close to 3 months or so away.
Sure.
What's your view? I mean, could those stocks be under pressure? Will there be a risk to their earnings as well? How do you play them?
First of all, let me qualify saying that I'll only comment on HPCL. You'll have to forgive me that BPCL and IOCL are on our restricted list, so we can't really comment on our ratings or view on those two names. Having said that, HPCL, if you really look at it, obviously the marketing margins for the next couple of months will remain under pressure. There is no doubt that if marketing margins actually decline below the 3 rupees normalized margins that we're looking at for the full year, that has a fairly significant, impact on the earnings and profitability. Having said that, the election results are likely to come in the first week of June. And, we would not like to speculate on when and to what extent the price increases to sort of align with the change in the crude and product prices will start to be allowed again. our core contention is that, what we have seen in the past as well, that the government has been fairly proactive in terms of allowing the companies to recover their, losses, or, even if it is with a lag. So at this point of time, we would like to say that, yes, there's probably 2 months of weakness that one is looking at, and therefore a slightly weaker first quarter. And to that extent, the FY25 earnings may see marginal downgrades. But from an overall year perspective, we would still like to believe that, as and when price changes are actually started to be allowed as normal business, they can probably pass on the hit that will happen maybe with a $90 crude environment. So,
Okay.
that's what our core contention is as of now. Obviously, it's changing every week. So, it's fairly fluid in terms of, how to look at it.
Okay. You want to just wrap up for us? What are the top picks in the sector? What is a void for you now? If you can just take us through your list.
Sure. We continue to be positive on GAIL, on MGL, on ONGC, Oil India, as well as HPCL in the space. We are a little bit cautious on Petronet LNG, specifically after the strength that the stock has seen right now, because we do believe that the capital allocation, specifically in the petrochemical project, will have, I think, a material impact in terms of return ratios and in terms of balance sheet quality, as well as, overall profitability over a longer term. So that is a stock that, we think, we are a bit negative on. Gujarat Gas, but also at this price, we are a bit cautious on. We do believe that multiples are at a sufficient premium over IGL and MGL. And there are enough concerns and volatility around Morbi volumes, as well as a lower than expected ramp up from the newer areas to, warrant skepticism, specifically at these price points. So that's broadly how, we're looking at it at this point.
All right, Prabal, thanks very much for that. Appreciate you joining in, and it's a pleasure having you with us here. Speak with you once you start to, once we start to get these results, etc., going. Just want to highlight one name. I'll pull up PB Fintech. That is Policy Bazaar. On Friday, it sold off 5%. It's down another 5%, so 5.5%. So the high on Thursday was 1,400. Not Thursday. Thursday was a holiday, but Wednesday was 1,400 rupees was the high. And from 1,400 is down to under 1,200 in 2 days flat. Now, that the last news, of course, was the fact that ICICI Lombard, the largest general insurance player, comes on the PB Fintech platform. And there was a bit of a run-up in response to that. But, I mean, this, even in the light of that run-up, getting corrected is a bit excessive that we have seen. Not sure if there's any specific news flow, but that is a large cut. And by the way, it's got third largest volume-led loser right now on the NSE. It's still 10:1 in terms of declines outnumbering advances. So pretty deep in the red market breadth overall. Mitesh Thakkar is with us. Mitesh, hi. Good morning again. So the Nifty's gone to almost the 20-day and then bounced a little bit. Do you think eventually we will see a break?
See, I think, Prashant, there's this 20-day average. There is this historical pivot of 22,250. We took a lot of time clearing that, and therefore becomes a support pivot. But the gap down in the position of the indicator is not very good. So while you may get some kind of a bounce back today, maybe till tomorrow afternoon, I think at higher levels, you will see supply re-emerge. So the idea is to now wait for this bounce back to play into. Closer to about 22,400, 450 zones is where I would want to go aggressively short or buy into put options for the April end expiry. And the idea is to now, in the short term at least, be a seller on rallies. So slightly negative view, but not tactically. I think this is not the best time to initiate short. So wait for that pullback to happen, or you go short once we see the 20-day being taken out.
All right, Mitesh, any individual stocks you're looking at?
Yeah, in fact, a couple of them. I think Gas Authority on the long side can be bought with a stop below 198 for targets of 210. And on the short side, I have a sell on Canara Bank, which I would recommend selling with a stop about 605 for targets of 580 to about 578.
Okay, all right. Thanks a lot for that. Let's slip into a quick break. On the other side of the break, Manisha Gupta joins in for a quick roundup of the commodity market. Stay with us. Well, let's take a quick look at what's happening in the commodity markets. Manisha is joining in. Manisha, what's the one commodity you're looking at today?
Well, I'm looking at the metal as a sector, Sonia, because we've seen a huge jump come in for the Asian markets onto this one. Given the fact that we are looking at geopolitical tensions, so most of the tangible commodities have been doing well. But the metal surge of between 1 to 5% in Asia also comes in on the back of the weekend news, where we have the US and the UK telling Russia that they will not be taking any Russian metal delivery on their exchanges. So these are a couple of top exchanges, CME and LME both, which where you look at for metal prices, will not take Russian metal on the exchanges anymore starting 1st of April. But not just that, the imports also have been banned of aluminum, copper and nickel from both of these countries. Now, if you look at the number really, much of the metal that is lying on LME right now is from Russia itself. So whether it is about aluminum, 91% of aluminum which is on LME right now belongs to Russia. We are looking at stronger numbers at 62% in sense of copper, and 36% of nickel, which is on LME warehouses, also comes in from Russia. So these are huge numbers, and especially in case of aluminum, if there is no more metal coming in from Russia, you are looking at those concerns coming in for this metal. I want to talk a bit more about aluminum because the prices did surge 5% in Asia today. So this has been an outperformer within the sector. We are looking at 13% of gains in sense of prices in 2024 till by far as well. There also are tight supplies in the Asian markets which have been supportive for the aluminum prices. If you look at the premium for Japan, that has been on the higher side as well. So from the month of April to June, the premium that Japanese buyers will pay for aluminum has been hiked up by nearly 60% to the tune of $145 to $148. Last quarter, it was at $90. So you are looking at that 60 to 65% of a jump for aluminum buying. So whether it's about disruptions that we are seeing or supply, pardon me, we are looking at support coming in for aluminum because of that. Copper should come in on your screens because that's one is trading at 14-month highs. You have zinc now trading at a 12-month highs. Iron ore and nickel prices trading at a 2-week highs. We have seen 1 to 3% of jump come in across these metals as well. There is important data coming in for this week as well. You have the first quarter GDP numbers from China that comes in tomorrow. And then Japan trade data and inflation numbers also coming in on Wednesday and Friday. So further cues would come in from that. But it definitely is a buy continuing in case of metal prices until then.
Manisha, thanks very much for that. So some support there as far as commodities are concerned. Manisha, thank you. Well, Senco Gold, let's just revisit that name. Mangalam highlighted that pre-open, stocks up 7%. Mangalam, back to you.
Well, the stock is doing extremely well in today's trading session, and that makes it the third jewelry company to report good numbers. And there are three reasons why Senco Gold is doing the way it is as against the other companies. The first one is that the revenue growth, 39% revenue growth for the fourth quarter is extremely strong. It's stronger than the 38% that Kalyan Jewellers reported and stronger than the 20% that Titan reported as well. The second parameter was same-store sales growth came in at around 23%. That's a positive. And the third one is that this is the only company so far which has reported better studded ratio than the others. So, 11.4% studded ratio implies better margins for the company as well in the fourth quarter. They've added 4 stores in the fourth quarter, 23 in this year. It's a recent listing. So 23 stores in a financial year is the highest that the company has added in a year. And for FY24 itself, a 13% volume growth in gold prices with in gold sales and 19% growth in diamond volumes. It's something that the street is celebrating. And add to that, they are optimistic about FY25 as well, with the first quarter itself having a lot of festivals, the New Year's that took place over the weekend, Akshaya Tritiya and the wedding season, all of them poised for good growth. And with gold prices rising, they say that it's the unorganized players which tend to, lose out, whereas the organized players try to consolidate their industry leadership, and as a result of which the stock up 14% as we speak.
All right, thanks a lot for that. Well, let's move across to Hormuz. He's tracking the mutual fund holdings changes that we've seen. Some interesting changes there. Hormuz, over to you.
Very interesting changes actually, Sonia, as you were mentioning. And some start off with the large cap names, and this is across fund houses. And some of the main additions that they have made in the month of March include Reliance Industries, TCS, ITC, and of course that shift that we were talking about towards the large private sector banks, because Kotak Mahindra Bank and HDFC Bank also feature in those list of additions. Among the reductions that the mutual funds have made, and there's a shift there from PSU to private banks because SBI features in that list of reductions. Infosys, ICICI Bank and Shriram Finance also feature in the list of reductions there. Among the mid-cap stocks that were added during the month of March, those include Max Healthcare, Aurobindo Pharma, Indus Towers as well. The stock did very well in the month of March, so that is an addition. Samvardhana Motherson and a beaten down name like Jubilant Foodworks also features in the names of additions. Among the top mid-cap reductions, Sundaram Finance, there is Ashok Leyland, there is Ramco Cements, there is Lupin, and APL Apollo Tubes as well. Now, all of this is also from a note from Nuvama citing ASMF as well. The top small cap additions that they have made, those include the likes of NLC India, Aavas Financiers, Aster DM, of course, the stock is up and about in today's session. Aditya Birla Sun Life AMC, another underperforming stock but features in the list of additions, and GR Infra. And among the top small cap reductions include Amara Raja. We've been highlighting about how mutual funds have increased their stake in battery makers, both Amara Raja and Exide over the last few quarters, but those features in the list of reductions. Bata, IDFC and Carborundum Universal features in the list of small cap reductions. Amongst small cap exits, funds that have completely exited names like Force Motors, Associated Alcohols, JBM Auto and GPT Infra. And some other interesting observations that this note highlights is Tata Chemicals. We saw the stock surge in the month over the last few months because of the Tata Sons listing and then the correction that it saw. Here, Quant MF and ICICI Prudential have bought fresh stake in the company. Ireda, the stock is down almost 8% in today's session. Then three mutual funds, Nippon, Kotak and ICICI Prudential have exited the stock. Tata Technologies as well, a recent listing, a stellar listing, but Nippon India Mutual Fund and ICICI Prudential have exited the stock. Lancer Container Lines, that's an interesting name that comes up where Quant Mutual Fund has bought fresh stake at around 2.5%, and that is evident from its March shareholding as well. And Axis MF has completely exited Hindustan Unilever and has increased its stake in Colgate Palmolive. And lastly, ICICI Securities. Now that stock is in focus because of its delisting, but here Kotak MF and ICICI Prudential have bought stake in ICICI Securities. So interesting names there, but some important names like Ireda are in focus at today's session as well. Back to you.
All right. Thanks very much, Hormuz, for that. So that's a very interesting sort of compilation of what mutual funds are buying and selling, the latest that they've done across a range of mid, small and large cap stocks. We'll take a break here. We put the focus on the skies, aviation, right? I mean, Mayur Malik of Asian Market Securities and Jaganaraya Padmanabhan of CRISIL will be joining in. We got lots happening in that space. The market leader, which is Indigo, of course, the stock's trading at an all-time high, has done very well over the last couple of years. That discussion coming up.
Well, let's focus on the aviation space now. The domestic passenger traffic in FY24 saw a 13% year-on-year growth. ICRA put out a note where they said that there's a stable outlook in the Indian aviation industry and they expect relatively stable cost environment in FY25 as well. To discuss how FY25 is looking for the sector, we are joined by Mayur Milak, who's the Senior Research Analyst at Asian Market Securities, and Jagan Narayan Padmanabhan, who is the Senior Director and Global Head Transport, Mobility and Logistics Consulting at Crystal Market Intelligence. So, gentlemen, morning to both of you. Jagan Narayan, I want to start with you because, you know, it has been a very healthy growth that this sector has seen, but it's also come with its own fair share of problems in the recent past. What is the outlook in FY25 for the aviation sector, given how travel and tourism is booming now?
Yeah, so I'll split this into two parts. One is in the summer part of it, which is the summer schedule, and then the overall growth for the FY25 part of it. So on the domestic passenger traffic part of it, we expect a growth of about 8 to 12% year on year in the summer schedule. And for the fiscal 2025, the domestic passenger traffic is expected to rise by about 12 to 15%. This is because of the supply issues getting eased out, and also we see a lot of additional capacity which is coming into the system later part of the year. And the travel sentiments across leisure, MICE, and the business is also pretty good. On the international part of it, on the summer schedule, we expect about a growth of about 10 to 12%. And also, this is going to be aided by a 15% growth across all major airlines. So that's the overall focus that we are having for summer schedule and for the overall FY 2025.
Okay, got it. So that's the overall setup of how growth would be, right? You're saying there's an 8 to 12% growth in the domestic passenger traffic segment that you're looking at in the summer schedule. And you gave us the full year numbers as well. But recently we've seen massive flight cancellations from Vistara and all the troubles because of what's happening there. What do you think the ramifications of this would be on the industry, both in terms of growth and the other incumbent players, and how they can sort of, grow here on?
No, sure. I think, and also there's a lot more growing in terms of the overall flight duty time limitations. These aspects have also started to kick in. Is on the shorter term perspective, yes, there is going to be some level of an impact which would be there. But having said that, in the medium term, and as far as the guidance which is given for the overall FY 2025, as we can see, we don't see much of a disruption happening. Also, new entrants like Akasa have ramped up their operations. They've grown significantly well. And also in the flights that they have ordered, which has happened, like Indigo planning to double up its own fleet capacity, Air India on the same heels, having about close to 470 odd aircrafts being ordered. All of these supply-related aspects will also start to come in. We're also seeing a lot more addition in the wide body happening, and hence some level of constraint which is happening because of the flight cancellations will be compensated by higher capacity, which also we expect to grow at about 8 to 10% of larger aircraft coming in.
Mr. Padmanabhan, so then we should not be talking about caps on airfares, etc., right? No need for that. Once in a while, people start talking about it.
No, I'm no one to comment on whether we put across or not, but the demand and supply is quite healthy. And with duopoly being there in the skies just now, and also Akasa coming in through, I think the market forces will even it out. I'm not equipped to comment on the cap on airfares.
Mayur, same question to you. I mean, you heard Mr. Padmanabhan on some of these issues. He says demand is healthy, the supply is also matching it, especially with Akasa coming in and adding capacity. What's your own sense?
We are in a time where demand looks pretty steady. So I think, yes, I'll quite vouch the fact that if you're looking at a 10 to 12% kind of growth, pretty much looks doable at the pace that we are at this point. Supply, I really never thought was an issue in the first place. In fact, for all you know, the industry was always worried that will supply be ahead of demand. So I think at this point in time, this looks pretty sorted. I think more of a worry is, the international things that are really happening at this point and its impact on crude. So that is where, as an analyst, I'm more worried. Really not worried much on the demand side as such.
Mayur, you've been tracking Indigo for so long, right? I mean, the stock is sitting at a fresh high. Of course, it continues to have market leadership. But now that problems continue with players like Vistara, which was the only strong player, so to speak, in the market, at the moment, it seems to be once again in Indigo's favor. Your thoughts on how this is going to play out, both in terms of growth for Indigo as well as yields?
So I think, I've maintained one stand, especially post-COVID, that there has been a lot of discipline in the Indian skies, the kind of pain the aviation industry went through. So despite, everything quite sorting out, we've never seen this airfare war back again. So I think despite crude coming in the correction zone, these guys have made up healthy money. So I want to believe that this continues. Indigo, of course, always stands to gain at anybody else's peril, So, but I really don't say that the issue at Vistara would be a long-stand one. I think a temporary one should give them some advantage. But overall, I still think that the Indian skies are pretty good for all the players who are, at this point in time, making some market share out of it.
Okay, so you're saying Indigo stands to gain, but the issues at Vistara seem to be temporary in nature. Got that. Jagan Narayan, I wanted your thoughts on the crude prices, because there was a sequential decline. Of course, that had helped earnings last quarter. But now, once again, with geopolitical tensions rising, crude is back above $90 a barrel. What do you think the ramifications of this would be on the earnings for many of the aviation companies?
Yeah, you're right. I think crude was one of the significant cost component as far as the overall workings of an airline is concerned, and it constitutes close to about upwards of 40%, between 40 and 45%. So any pressure there will have a ramification on the overall workings and the profitability of an airline. But as my colleague just pointed out, the margins for the single largest player is quite healthy at about 24%. Yes, this also, and I think on the pricing part as well, a lot of discipline has been shown by the players. Yes, so if the crude continues to increase, I would stand to believe that they would want to pass this on to the consumer by an increase in the airfare, and they have the ability to pass that on as well. So overall, the impact, if it goes above $100, then it's a different story. But I think as things stand, the VA passing on this benefit, passing on this to the consumer would be there. And second is the margins are quite healthy to absorb it as well.
Okay, the margins are healthy at this point in time to absorb the higher crude prices. Got it. Gentlemen, thanks for joining in and giving us a quick snapshot of what to expect in the aviation industry. Appreciate your time here. By the way, we've run out of time on Bazaar. We're leaving it with the Nifty down about 150 points. The good part is we haven't seen any worsening of the market since the initial gap down opening. But the bad part is we haven't seen any recovery either. So it promises to be a slightly volatile and slightly unpredictable day for the market, given that we have geopolitical tensions. But let's do one thing. Let us wrap the show. We leave you with a CNN News 18 exclusive. Finance Minister Nirmala Sitharaman, in an exclusive conversation with CNN News 18's Zaka Jacobs, said that the government is now focusing towards laying the foundation for taking India through the next 25 years to reach the destination, which is developed India. Listen in to a short excerpt from that conversation. Chartbusters will come up next.
In the 10 years that we have provided the basis for what we can take India to the next level, meaning we should lay the foundation for taking India through the next 25 years to reach the destination, which is developed India. So that is the first thing which was in his mind, and he ensured that there are indicators for the steps that we are planning to take Indian economy further. But equally, his emphasis was that we should not relentlessly pursue the welfare schemes. In a way, I don't want to use welfare as a word here. It was more to empower the poorest of the poor and make sure that we are able to support our farmers and provide enough opportunities to skill themselves for the youth, and above all, and very centrally to this whole thing, to keep women not just at the center of policy making, but to keep them up front there, so that it will be women-led all through. So these four groups on whom he has been talking a lot in the recent past is to ensure that through them, women belonging to various castes or youth belonging to rural, urban areas, irrespective of the caste differences or the income differences, farmers across the country, particularly the small farmers, particularly the kind of farmers who grow Shri Anna, that is the coarse grains, millets, and those other superfoods. So emphasis was on these. So everything that we had to do was very clearly put through this filter and tested if it will stand the test of time. Above all, I should recognize more than 15 lakh inputs which had come from the people of India saying we'd like you to put this aspect in the budget and in the Sankalp Patra and so on. So we've given a lot of emphasis for those inputs which have come also, and the Prime Minister was keen that we go through each one of them, and there was a large team sitting and sifting through the inputs which had come.
So, ma'am, there are two ends of the pyramid. One at the top end of the pyramid, the manifesto talks about, Viksit Bharat, about putting a manned mission into space, having India's own space station, EV manufacturing hub. And at the bottom end of the pyramid, as you said, there is a welfare stamp, no doubt, whether it is extending the free food, free ration scheme to 80 crore people, whether it is, 3 crore new homes for the poor, so on and so forth. Isn't there a contradiction between the two? On the one hand, you have a pathway to Viksit Bharat. On the other hand, you also realize that everything is not hunky-dory.
Well, I don't want to put it as it's not hunky-dory. It is a matter of reality that we have a section of our population which still needs to be empowered. And that is why you have the PM Garib Kalyan Anna Yojana, which is extended for another 5 years. You also have a section of our population which is the farming community, particularly the small farmers, who against all odds, some man-made odds, some nature-made odds like the climate, extreme weather conditions, are giving us food on our table. So are we not going to support them? And therefore we made sure that in order to empower the farmers to be able to better perform in their farms, we need to get technology there, get the drones going there, ensure that fertilizer, the dependence on imported fertilizer be brought down, and subsidize fertilizer so that the farmer is not paying through his nose for an essential input. So thought has been applied to empowering sections of Indian society which with dignity intact can grow into the system and contribute to the system. Whereas if you talk from the point of view of only Garibi Hatao, you don't seem to understand and appreciate the nuance that the policy should take in order to empower them. That is why we have gone to talking about it, not from the point of view of welfare, but more from the point of view of empowering them.